It is 10:41 Singapore, Hong Kong time. There's a look at where the dollar is standing at the moment against the Japanese yen, 95.23, lower against the Japanese currency, and the euro down against the U.S. dollar by 0.1%. Darius Kovalchuk is Chief Investment Strategist at SJ Seymour Hong Kong, and he is joining us now live from there. It's good to see you there, Darius. Looking at the stock markets, it sort of seems like risk appetite is returning, tentatively at least, to the markets. How is this playing out in your world for Forex?
The foreign exchange market has benefited from improvement in investor sentiment, albeit not as much as equities, because in particular here in Asia, we are sort of in a tug of war between the rally in U.S. stocks on one hand, but on the other hand, concerns that recession in our part of the world will last longer than across the Pacific. So yes, there has been a clear rebound in most emerging currencies in our region, but I think it's only tentative and that we will see further declines over the course of the rest of this quarter and first quarter of next year.
So what was your reaction when we got that industrial output from Japan for the month of October? It was a dismal number.
The Japanese data was pretty horrible, and in particular on the production side, as well as on the side of household spending. Clearly the second biggest economy in the world is falling into recession, and a pretty deep one. And my forecast is that the fourth quarter of this year will be the low point. However, there will be further 3 quarters of GDP contraction next year, and 2009 will bring a 1.1% shrinking of their economy. So definitely a lot of negative numbers as the country is taking a hit from decline in global demand for its exports.
Okay, and their interest rates in Japan are only 0.3%. I mean, it doesn't look like the BOJ has a lot of room to move. What could their next options possibly be? Is it back to quantitative easing?
I believe that they will cut rates again, not to 0, but to 0.1 percentage points. Clearly, Governor Shirakawa is very averse to the 0 interest rate level. I think that they can do more on the fiscal policy side. Unfortunately, the passage of the next stimulus package has been delayed and now can be expected only in the first quarter of next year, which is hitting
Darius,
consumer confidence.
If I could jump in here, I'm sorry, but what's the difference between 0 interest rates and 0.1% interest rate? I mean, really, 10 basis points. What's the difference of 10 basis points going to do? Is it purely psychological?
In terms of the impact on availability or cost of credit, clearly there is almost no difference, and the difference indeed is very psychological. But in terms of the mechanics of money markets operations, there is always a smoother way of functioning if you have a positive interest rate level rather than just 0.
Okay, what are you expecting from the Fed in December? I mean, the data over there has certainly been disappointing as well.
U.S. data has been pretty dismal as well, as anticipated, and the Fed is clearly determined to do everything possible to stimulate the economy. So there will be another rate cut. We are going for 50 basis points, although there is some in the market who are expecting 75. But I think that there is pretty much no difference between them cutting so low in December or maybe in January if they want to move again, and they will definitely want to leave at least a little bit of firepower in case the economy deteriorates further.
Okay, and getting back to this entire issue of risk appetite and investors moving back into equities, do you think this is the turnaround point that we've been hearing about for the U.S. dollar?
Oh yeah, definitely. I believe that the U.S. dollar has peaked as U.S. stocks bottomed out last week, because a lot of the flow of capital into the greenback was capital repatriation by U.S. investors from abroad as domestic stocks were suffering. So now that I think the low for the stock market is already behind us, the dollar will not see as high levels against the euro or the pound as it did recently. However, a word of caution for the very short term, I think the recovery in U.S. stocks has run its course. It's been, I think, too fast. So there is potential for some sort of of tactical upside for the greenback.
Darius, excellent as always. Thank you very much for joining us.
Thank you for having me.
That was Darius Kolacek, the Chief Investment Strategist at